Okay, so a very beautiful setup on CADCHF. Okay, guys, Alus FX here. We're gonna be analyzing CADCHF. So CADCHF looks like this at the moment. We all can see that this is a downtrend structure. Downtrend structure, so which means it will be formed up by forming the lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then currently the market is in a lower high. So what do we do? So on a monthly time frame, like we can start on a monthly time frame, but even on a weekly time frame, like we do have a structure to say what the market really wants to do. Like in this case right now, we can just mark that sensitive point that the market made a very huge turn on it from this monthly time frame, and then we can just try to look try to pay attention when the market gets to that point, like if it's gonna react to it or what. Like in this case, we have got this low right here. See this low right here, and the market it's closer. There's a very small space between the where the market is currently at and that line that the market once reacted on. So this is the only line that we're gonna mark on a monthly time frame because the market might possibly react to it. Okay, so on a monthly time frame, that is the only thing that I can do. And then I can also see that the market it's in a what? It's in a downtrend. After this correction, see the market after this, it did this correction right here. The breakouts gave us an impulsive phase, this smaller than an impulsive phase. So the market has been in an impulsive phase from this high right here all the way to this low right here. So the market currently it's in an impulsive phase. So we do not know when will this impulsive phase end. But when you go to a weekly time frame, we get to see what are we actually dealing with. Okay, so remember guys, we start on a higher time frame so that we can just look for a direction of this market. That is the only thing that makes us go to the higher time frame, because we're looking for the direction of the market, and then we're also looking for those major points where the market had a massive or a strong push zones. Those are the only things that we're gonna be looking at on the higher time frame. And what I usually approach the market, guys, it's always trying to, when I change the time frame, most of the time I clear the information of what I've got from the higher time frame, because in my mind I still have the picture of where was the market heading to. Okay, that is the only thing that I'm looking for. Where is the market heading to? Is it towards the downside? Is it towards the upside? So you can't forget that information, or you can't ignore that information, because the more I go towards the lower time frame, I keep on changing the information. I erase these things because I already knew what direction am I going to. Okay, so like in this case right now, I already see that okay, this is a downtrend. This is a downtrend. This market is going towards the downside, and then I'm just going to only concentrate on the last part of the graph. As you can see, with okay, we've been in a downtrend, the market forming lower lows, lower lows, lower highs, lower lows, lower highs. As you can see, the market has been going towards the downside. So I do not need to draw all this information from this high right here, because it's a weekly time frame. It took years, I think. You see from here, Boma 2022, and then here's 2023, and then here 2024. So anyway, we would want to concentrate on what something that is happening on 2024 than to go back all these years over. So what we're going to do right now, we're just going to concentrate on this last impulsive phase of the market. That's the only thing that we're going to concentrate on, because it's the one that is going to give us an idea what the market can possibly do afterwards. Okay, so we have this high. Okay, this was the previous low. This was the previous low of the market. So the market gave us this correction and then gave us this impulsive move. So after it gave us this impulsive move, so which means this was the last impulsive move of the market. So where is the market currently at? The market is currently in the correction phase. This is very, very, very important. The market is currently in a correction phase. So if the market is currently in a correction phase, therefore, which means you would know back, you would know Oguti, if you were to take a buying opportunities, You can't be buying all the way. You can't be buying all the way to say you're gonna be taking your profit maybe on this high right here, because the market is in a correction phase. So usually when the market is in a correction phase, it does not correct all the way to the previous high before it goes down. It corrects, probably if you are using Fibonacci, you would know it corrects about 50 to 61.8%. That is what they call it, a golden zone most of the time. So we can also make use of that Fibonacci retracement zone to say, let's look at it, and then we just get to mark the golden zone, the possibility where the market might actually turn on. So like in this case right now, this is how our golden zone looks like on a weekly time frame. So which means we are only looking for the what? We are only looking for the market to give us something like this, in this golden era to turn, and then the 90% rule would be towards at this point, or would be the market can even break towards the downside, because we are in a downtrend market, so it can possibly even go all the way down. Okay, so this is our golden zone, and on a weekly time frame, okay, the only thing that I can say we can be looking that the market is in a correction phase. And the correction phase of a downtrend, remember always that the correction of a downtrend, it is gonna be an uptrend. It's just a common sense. If something is in a downtrend, when it's correcting, this is an uptrend. Obviously, it's gonna correct, impulsive correction. So the correction is gonna be in what? It's gonna be in an uptrend. So if it happens that you are getting certain opportunities in this correction phase, I wouldn't say downtrend, I mean sales opportunity in this case, they would be good. I would say buying opportunities in this correction phase would be good until a golden zone, whereby you'll be stopping to look for buying opportunities. Now you'll be looking for what? For selling opportunities. So this thing, it's all about understanding. It's so not all about just seeing or buying opportunities and be like, you know what, I'm buying, and then tend to forget that you are buying now, but the market is currently in the golden zone where it has chances that it might correct. Okay, so we are in an correction phase now, but that correction phase, we mustn't forget that it is an uptrend. So in an uptrend, we'll actually be looking for what? For buying opportunities. See, so that is very, very important, guys. You need to pay attention to that. So by looking at this golden zone right now, currently, you can already see with this high, this point right here, where the market made this major move towards the downside, it's still within the range of the golden zone. So we can readjust the market to say, okay, if it can get to this zone, if it can get to this high right here, then the market maybe might be that possibility ukuthi iyenzani, izofika ishaye lana and go towards the downside. That's what we're looking for. So the strategy that I'm using, I always say that we draw the correction phase, we draw the trend line on the correction phase. I always emphasize that you do not just draw a trend line anyhow. You only draw it on the structure that it's in a correction phase. Then you would benefit from that, because now you will be targeting what? You would be targeting the impulsive phase. But if you're gonna draw it anyhow, then you're gonna have a problem. Okay, like in this case right now, from the higher time frame, we've discovered that the market is currently in the what? In the correction phase. So we're gonna draw a trend line like this to say, you know what, if the market did happen by any chance, it closes with a very strong candle below this trend line, then we would know for sure, okay, now the market will be going towards the downside to give us this what? The 90% rule. Okay, but what I said to you, when the market of a downtrend, it's in a correction phase, it will be in an uptrend. As you can see here, we have this impulsive correction, impulsive correction. So it shows that, okay, the market is going towards the upside, but we mustn't forget the direction of the weekly time frame that we saw. We saw that the market is in a downtrend, but in the correction phase, the market is in an uptrend. So we can make use of this uptrend correction phase so that later on we can, because if you were to make sense out of this thing, they say the downtrend we're looking for selling opportunities only. In an uptrend, we are looking for buying opportunities only. So if you are going to apply that idea on a higher time frame, so which means you're going to have to wait for weeks and wait for days for the market to reach this point so that you can start selling the market towards the downside. So which means in a way there's going to be those good opportunities that you did not take advantage of because you are waiting for a certain direction, because you've been told that in a downtrend you must sell, in an uptrend you must buy. But within the downtrend you can find it down. If within the downtrend you can find an uptrend, within an uptrend you can find it a downtrend. So you just have to understand your structure and make use of it. Okay, so in this daily time frame, we have something like this. We know that the market, at the moment it breaks this trend line, we are going down all the way. So we're gonna change the time frame and see what does the 4 hour have for us. Okay, I remember in this correction phase we are in an uptrend, so we're gonna make use of this uptrend. So I'm going to clean everything up because this trend line is going to be broken after so many days. So I don't think at the moment we should be looking for selling opportunities. So we're just going to get rid of that. So we're going to start afresh now. What do we have? We have this lowest point. The market gave us an impulsive move to this point. So this is an impulsive to this high, and then the market gave us a correction to this lowest point, and then it gave us another impulsive phase, and then it created this high right here, and then it gave us another correction, created this low right here. So let's just say, for argument's sake or for explanation purposes, this part of the graph was not here. Let's just say this part of the graph was not here. What I'm seeing right now was not here. This highlighted part of the graph was not here. What would I have done? I would have come to this chart and be like, okay guys, so this market was in a correction phase. So I would have entered this trade like this, because definitely I would have entered this trade. The moment the market closed above, see this candle, the moment this candle closed above this correction phase, because I already know that this is a correction phase, so I would have entered this way. I would have done this. I would have said, okay, buy at this candle right here. That is how I take my trades. I would have said buy to that candle right there. Okay, but there is something that I removed, which is very important, that I shouldn't have removed. This previous high. Remember the golden zone? Remember the golden zone from the weekly time frame? It was somewhere here. So that is what we're going to use as our take profit. So it would have been there at that point right there. So what we need to do right now is, I would have used the, okay, let me just remove this, but just think of it, this part of the graph is not there, because I just want to explain something. So I would have said what? I would have said, I would have used this part of the graph, because the market once rejected here. So since, well, the market once rejected here, I would have used that as the zone to protect my stop loss. I know at times my stop loss really looks big at times because of how I entered the trade, but sometimes, if like in this case it's in a 4 hour time frame, if the market breaks like this, sometimes it's better to go to a lower time frame just to wait for the market to give you this impulsive phase, and then you can make use of this correction, like the correction of this impulsive phase, so that you can be able to enter. But the best way, or how I enter my trades, I wait for the market to break above the previous the correction phase, and then that's when I enter. But in this case, because I didn't see this breakout in time. The only thing that I just saw the market currently where it is right now. Excuse me. So this is how I saw when I was checking the things that maybe might possibly give me a good opportunity. This is what I came up with. I saw something like this. So I what I did is I just did something like this. I just did something like this. I made use of this impulsive phase. I made use of this impulsive phase. So the market gave me an impulsive phase, and then it started doing what? and then it started giving me a correction. So the market is currently in the correction phase. So I'm telling you, like, I'm 100% positive that if you go back a little bit to a daily time frame, there's another structure like this one. See this point right here? It's another rejected zone. So you can see with the how sensitive is that part is, how sensitive is that zone, because after the market rejected this zone, it pushed the market all the way to this point right here. So if the market is being rejected at the very same point, it shows that how powerful or how sensitive is that zone that can possibly push the market all the way up. Yabo? So you're making use of that, but it's just aiding as one of the confluence, but it's not the strategy that we actually use, but it's aiding as one of the confluence. So this from here, so this part right here, it was the correction phase before the breakout. So after the market made the breakout, it consolidated a little bit. It did not want it to shoot all the way up. It just gave us the consolidation. But now, at the moment as we speak, it's going to give us a beautiful buy. So this was the previous high. There's no need really needed for us to keep this point right there. But if the market comes all the way up to close above this zone right here, that's when we are going to enter this trade. That is when we are going to enter this trade. We're just waiting for the market to do what? To break above this trend line. So guys, this trade is going to play out. I'm telling you. I am telling you. So what I'm going to do, I'm going to put in alert that when the market breaks this zone, I'm going to get a notification from my phone to say, you know what, the market has just broke above this highlighted a zone. So keep note on the CADCHF. It can pay you, like you can see with this is the golden zone where the market can possibly turn to, and then just going to wait for the market to hit this take profit, and then we can start looking forward for selling opportunities, because this is a downtrend, but we just found that something like that looks like this, which can be very beneficial. So take screenshot, but I'm going to post this on my YouTube before I sleep tonight, so you can just go to my YouTube channel and even maybe re-listen to this. But I wanted to explain something earlier on, I wanted to explain something earlier on. What was it that I wanted to explain? That most people they're making mistake a lot when it comes to it. Some people they make a lot of mistake when it comes to that. But let's just say I would remember maybe while analyzing another chart. Okay, so this is how our CAD looks like, guys. It's going to be a buy when the market breaks above that. So yeah, I'm going to stop this so that I can upload it on